Welcome to Consultants and Money, the podcast for solo consultants who want financial clarity without the overwhelm. I'm your host, Erica Goode, CPA, bookkeeping, and CFO partner, and a fellow corporate ship jumper who built a business with balance in mind. Each week, we talk about the real money stuff, from keeping your books clean to calming cash flow chaos, saving on taxes, and planning for what's next, so you can focus on your clients and enjoy your life. A quick note, this podcast is for educational and informational purposes only, not financial, accounting, or legal advice. Be sure to talk to a professional who understands your specific situation before making any decisions. Hey, welcome back to the Consultants and Money podcast. I'm your host, Erica Goode. I want to do a quick tip today. It is the middle of tax season, and whether you're DIYing or you're working with a tax preparer, oftentimes I hear in my everyday life as I interact with all my friends and neighbors and community because they know I'm a CPA, I hear things like, I paid so much in taxes, or, I owed taxes. I need to do something different, or I need to find a better preparer, or I'm missing something. And there's this idea that your taxes are wrong, or you've done them wrong, or somebody's done them wrong, or you've missed a deduction or a credit, and that's why you have to write a check when you're done doing your taxes. Like you've owed money. You don't get a refund, you owe money. And writing a check, whatever amount it is, never feels good when you're writing a check to the IRS, especially when it's a surprise, like you didn't plan to have to write a check. And so a lot of people get frustrated that there must be something wrong, something's off. And I would argue in most cases, your taxes are probably correct, right? Like if you've hired somebody good, I think most CPAs and most EAs are doing a great job preparing taxes. I even think if you're DIYing and you're using a good program, whatever they may be, like TurboTax, or I know H&R Block has a program, if you're going through all those steps and you understand what you're doing, I would gather to guess that your taxes aren't very wrong, or maybe even wrong at all if you have a simple return. I think the higher complexity you get, the higher income you get, it's probably time to start having somebody do your taxes for you who really understands the nuance of federal and state tax code. But if you're doing a simple return, a couple W-2s, maybe one Schedule C, even then I feel like a lot can happen in a Schedule C. But let's assume that your taxes are done correctly. What I see people get hiccuped on, what I see people stumble on is not so much that their tax number is wrong, but they get the surprise of having to pay because their withholdings are wrong. Whether it be how much estimated taxes you paid for your small business, or how much you or your spouse paid in your W-2 withholdings at your day job. And so I want to walk through just a really quick gut check today, whether you have somebody else doing your taxes or you have done your taxes. This is a quick way that you can just spot check where there might be a withholding issue. So if you have your taxes done, I'm looking at Form 1040. It's the basic form for federal. Let's just start with that, Form 1040. For 2025, we're going to look down on line number 24. If you're using 1040, everybody will have the same line 24. It's called total tax. This is everything you paid in taxes for the year, not necessarily what you owed or a refund you got. This is just straight taxes that you paid to the federal government throughout the year, whether it was a withholding, an estimated tax, or money that you'll have to pay after your taxes are done. So I want you to look at line 24 and then simple math, divide it by 9, which is total income. So all we're doing is super simple third grade math, dividing, use a calculator. You do not have to do this by hand. You're going to get a percentage. You're going to do your total tax, line 24, divided by your total income, line 9. And you're going to get a percentage. It might be something like 10% or 15% or 20%, might be 5%. Whatever it is, that's what we were going to call your effective tax rate. I know people define this slightly differently, and tax software might spit out a slightly different number. But for the purposes of gut checking your pay stubs and your self-employment income, your small business income, this is what we're going to do. So we're basically saying on average, this is how much tax you withhold from your income. So total tax divided by total income is your average tax rate. Let's say your total tax number in line 24 is $10,000. And then your total income in line 9 is $100,000. So 10,000 divided by 100,000 is going to be 10%. So you're going to say your average tax rate is 10%. Now, I want you to go through and see if you or your spouse have any W-2s that you got for the past tax year. I want you to go to that check stub, take your last pay stub of December of that year, and go find in that pay stub how much federal income tax withholding you withheld throughout the whole year. And then I want you to divide that by your gross wages in that same check stub. You're going to get another percentage. Now, if that percentage is closer to 5%, but your average tax rate is 10%, that's going to cause you to likely owe something related to that paycheck unless you're compensating for the tax payment somewhere else. If you look at your pay stub and that percentage is 20%, but your average tax rate from your tax return is 10%, you're probably going to get a refund at the end of the year unless you are correcting for somewhere else on your tax returns. So now this is a super general advice, right? There are so many nuances and different things that you want to look at. This is where it's great to have a CPA or an EA come in and help understand all the different levers on your tax return that you're paying taxes on. Because if you're getting dividends or interest from a taxable brokerage, oftentimes those don't get taxes withheld. So you're going to have to pay estimated taxes on that particular income if you don't want to owe, or you just expect that you're going to have to owe at the end of the year, which is okay too. You can avoid this with safe harbor payments, quarterly payments, but what we want to avoid is surprises. And also what we want to adjust for is if you're just flat withholdings in your paycheck, whether it's a W-2 in a non-small business employer, or whether you're an S-Corp owner and you have a W-2 coming from your business, you just want to make sure that your withholdings are consistent with what your tax return is saying that your average tax rate is. Now, I will be the first to admit that the W-4 that you filled out for that employer, especially if it was recently, we used to say, how many exemptions do you put down on the W-4? That's kind of old language that changed a couple years ago when the tax law changed. When we got rid of exemptions on the tax return, now we don't put exemptions on our W-4. So I think personally, my own opinion, that new W-4 form is super complicated. It does not spit out necessarily exactly what you want on your tax return, especially as your tax return gets more complicated. As you grow in income or as you add more credits and deductions, and especially as you have self-employment income from a business. So what you may want to do is fill out that W-4, and I'll be honest, this is what we do in our family. Fill out that W-4 to the best of your ability, see how those withholdings are coming in, and check it throughout the year to see what percentage you're withholding, and then fill out another W-4 midway through the year and adjust for additional withholdings or less withholdings if you're finding that your percentage that you're withholding on your federal income tax at your W-2 is different than you really want it from your average tax rate of your 1040. Okay, so that's all I have for you today. Just checking your withholdings. If you have any W-2s in your family, you're going to pull up that 1040 and you're going to focus on lines 24 and line 9. And then you're going to pull your last year's final pay stub and look at what percentage you withheld for federal income tax on your W-2 and see if those are aligned. If you have a huge difference, then that might be causing either a huge amount owed or a huge refund on your tax return. And that's a great place to start and start asking questions to see how you can adjust for the upcoming tax year so that you don't get a big surprise in the following tax season. I hope this helped. If it did, maybe you know somebody that it could help as well. Feel free to forward it to them. And until next time, may you keep your effective tax rate low and your surprises even lower.